Hey, it's Matt with PriceActionTradingSystem.com, and it is Monday. It's March 29th. This will be our chart lesson for today. And really, we're just looking at a range day today. Early on, I had my highs here, but once we pushed on through there, I went to the actual high of the day, which is right in here. And even that didn't end up doing it. We broke out of there a couple of times, but as you would expect, those trades will probably fail. Um, on the breakout, and that's what happened. Uh, we still closed pretty much inside the overnight highs and lows of the day, and we spent 95% of the day trading within that. Although this was a pretty good uptrend, and we had a pretty good downtrend. This got a little dicey in here because even though it's down, prices are still swinging above and below the EMA, and they're really struggling to go lower. Although you can still see the bias is down. There's a couple of ways to look at this. I originally had the magenta color here, and then it just didn't look right. So, and that was actually when prices were about like this. And so I changed it to the green one off of these few. And you can see they both really kind of played out. Um, so it didn't really matter which one you used. You could have used the magenta or you could have just used the green and then the yellow one. They both worked out. Actually, I like the yellow one better. So, but I wanted to show this one in case you saw it that way because originally I saw it that way and changed it to look like this. And so either way you did it, both of them tend to work out. I tend to like this because it just gives you a little clearer look on each individual trend. There's three different trends working lower here, and all three of them are valid. So that's the way I looked at it, and that's the way I'm going to leave it because that's how I kind of traded it as a day for the day. Um, and you can clearly see when you back out it's a range day. So the question mark was where were we going to find resistance? Really by the end of the day, we found it up in this area. So that's probably the more accurate look at it. But all you had to go on early was either the high of the day was really the high of the day exactly or the overnight. So but I started out here. As you can see, if you start out here, your midline seems to be in play. And so that might actually be more correct. And this may actually be all overshoot here. But I did move it up to the high of the day, which is right there, which is also pretty much the close from the previous trading day, which would be Friday. So, and again, the midline tends to work out there as well. So I believe this to be more accurate at the end of the day. But no matter how you played it, always double check it. You know, if you're not using the high of the day and it doesn't end up holding, then of course move it to the actual high of the day or the next high swing and keep going until you do get to the high of the day. But in the end, I believe this to be correct. So let's back out. We'll talk about the trades. There's a lot of them, especially early on. The afternoon got a little bit more difficult. This was a really nice trend up, and I don't see any good trades to enter this except for maybe this one. So there's just not a lot of good opportunity to enter that uptrend, unfortunately. So it is what it is. But that's where a lot of traders will make a mistake. They'll force those entries on those kind of big moves. They'll keep seeing it go without them, and then they'll force one, and they'll probably force this one right here, and then you get a second entry right off the key entry point, and it's a perfect entry from there on. But that's what will happen is people, just about the time they can't watch it go up anymore, they'll enter and then get stopped out almost instantly. So just don't chase trades. And sometimes you'll get big moves that you just don't get an opportunity to enter. And that's what separates really good traders from average traders is the ones that can sit idle and wait. So hope that's helpful. But anyway, let's talk about the trade. 7 o'clock came right in here as we're making this high and turning down. But you hadn't had a break outside this trend line yet. And you notice you got a leg up and then two equal legs there. And so you're probably going to get two measured legs up. I would start there and measure it like so. But a lot of times it'll be from the actual closes like that. Especially the overnight stuff, and you see that gives you almost a perfect measured move. So, but I would have started just like you see it right there. But when it came up short, you might measure just the actual bodies there from the highs and lows just to see. And again, if you measure it that way, you could see it's pretty much a perfect measured move. So you got your two legs up, and then you got another two-legged correction. So there's a chance you get another leg up because you can clearly see the two legs there with a little trap, and then it heads higher again. So we had those two legs up, and you get this lower high right here. I marked this trade green simply because if you notice that high and you try to go higher once and then twice, technically it does not break higher here, but you can still kind of see that little double swing, and there's like a little two-legged move. So if it turns lower, you're probably going to get another leg down, and that's a little more advanced just because it's a range day. I went ahead and marked it green, but I probably should have just left that trade alone. But people always ask me to talk about everything I see and kind of describe it, and so I'm trying to do that occasionally on something like this. But clearly you can see that big move down, then we tried to go higher once, and then we went lower, and then we tried to go higher twice. And so technically there's two attempts to go higher, so it looks like a failure on a range day. And when it breaks lower, it is on the other side of the EMA. Technically you want to see that on the other side of the EMA, so that's another thing that I just don't recommend that trade, really. I probably shouldn't have marked it, but I'm just trying to be, it was one I like to be a little aggressive with. So, and you can clearly see how it was a quick, easy move, and you probably couldn't have got in if you waited for this bar, which technically this is where it failed when it broke below, but you might have seen this bar and says, oh, okay, well, I'll try to get in here, but you wouldn't have had time. So you had to see this as a trap and a failed second entry long and put your sell stop right there ahead of time. And then it's just a quick, easy move. And then we get a close outside, a move to a new low, all in one bar, and it reverses. And unfortunately, you don't get a chance to enter this one. There is a failed second entry long here, but that's just too far away from the EMA and right into the highs. Yeah, it works, but you just don't want to take that trade. Then we run up, we get a close outside a new high. I meant to actually mark these trades, somehow I missed them. I like this lower high here, and you could look at this as a failure with still some room back. The problem is you wouldn't have been able to get in this trade, and I think that's why I forgot to come back to this, because I was just kind of contemplating how to discuss that. Because notice how there's a little gap there. It closes on its low, opens on its high. It does work its way back here, but from way down here all the way back, I still don't think it would have hit your, it would have triggered your limit order. And I don't think I would have held on to a limit order, because you can clearly see there's already two legs down there. And so then you make a new swing high, then a first entry and a second entry. So that's a failed second entry long that actually breaks higher and turns down. I like going short on the engulfing bar on that one, because it does confirm that key entry point. It is a failed second entry long. It's just a first entry short though. So just make sure you see that. Probably the safer trade for the average trader is when it broke higher here and failed and turned down, because then you got a lower high and also a second entry short. That's a second entry short when it breaks lower there, because you got a first entry and then it went higher and then it turns down. So there is a second entry short there and a failed second entry long. Then we kind of work on down. We're getting too far away from the EMA. And then this is a perfect setup. Two legs back. We do break the trend line in the EMA, but that's a fairly small bar. It's only 6 ticks, very low risk. Second entry short, decent signal bar. That's an easy setup for you right there. And you did get your close outside, and you get a couple of moves to a new low, and then you try to go higher once. And you're just kind of working sideways, and you get kind of dicey here. It's kind of hard to really know. You definitely don't want to be trying to go long yet, because we're still kind of running. We're still making lower lows and lower highs here for the most part. We made a higher a higher high and a higher low, but then suddenly we're not going anywhere. There's no long set up here yet, but when you get this short trap, you may take it. And there's actually a first entry short, then a second entry short, and then there's a lower high, but you try to go higher a few times here too. There's actually a second entry short right there, but you can't necessarily call that a failed second entry long because it failed when it broke lower right there, and that's just an additional failure. But when it tries to do it a third time, I like going short there, because a market that tries to go higher that many times and Kane is probably going to go lower. Plus, we're looking for prices to come back down and test the low. So that's what you're thinking right there. But of course, it makes a new low for this channel and then fails. And then of course, you can see we turn back down right there. So you draw your trend line, and then it's pretty obvious. Hey, we're just kind of working sideways until we make another lower high here. And again, you make a new low, so you're working up and you get a first entry, and then it breaks higher again and fails. So again, that's another second entry short. It's a little harder to see. It's a little more advanced, but it confirms that trend line. It's a second entry short, and it's a big bearish bar. I like going short on the engulfing bar when it breaks lower, but you could still consider going short right here. You're real close to the lows, so you might have to let it break lower and drop a limit order a few ticks back to make sure you got enough room that way. And you actually could have gotten filled up here basically at the same place you would have on a sell stop. So that might have been worth a second try to get in that trade, especially when it confirmed that trend line. And you see it does drop on down. And you actually get another second entry right here, but that's just too congestive. And it's just hard to know right there if prices are going to, you don't know that they're really going to do this. And I don't think you want to go long either. I just don't think you want to go short when you got that big doji and then an inside bar. And then I believe this one breaks higher and then turns down. It's an engulfing bar. I'd wait till that to close. And so when it closes with a little 2-bar matching low, and then this one closes inside, you just can't go short right there. If you went on the engulfing one, you got fooled. So that's why sometimes it's better to wait on those, because that looks like a lower high off the EMA, but the problem is you're right in that midline, and we just came off the lows. So there's a good chance you can get trapped there if it's not a great setup, and then it turns higher on you. And again, you don't know that it's going to run up like that, but there's a good chance it does exactly what it does. And again, you get the close outside and the new high all in one, and then you get a lower high here. I just didn't like this one because it's an inside bar. But if you wait just a minute, you get the failure, and it does confirm that trend line. And it actually breaks higher again. Again, you probably want to wait for that bar to close. And you're just looking for a new low, and you're really looking for prices to come back down here. That's your main target. And the better trade's probably to wait on the lower high, which comes here, and it gives you a little more room. And then you actually get another attempt to go higher, but by that time you've bounced here too many times. Even though it goes on lower, you just have to kind of sit tight. And you just don't get any other opportunities really to go short here, because now you come off the bottom. And there is a higher low right here, but we didn't quite make the low down here. So I would wait, and you get another higher low here. But again, it's not a perfect signal bar. It's real close to not. I don't know if that closes in its upper 1/3. I just think it's too close for a first entry, even though you probably could look at it as 2 legs up and a failed. So that's moved a pretty good bit. And so it could break higher and then run on down here and then bounce. And so you really just don't get a chance to go long. Now, there's no real truth. There's rejection right there, but it's not off the key entry point yet, really. And you don't really have a new, you did get a break and a new low right here, but you don't get that second leg that makes it a lower low. So I just don't think there's any longs in here. And I wouldn't want to go short anymore. There's not really a good short setup either, especially after just bouncing off the lows. So just wait. And then, like I said, you really just don't get a chance to go long here. You could look at this as a higher low. It's not really a failed second entry short though, because your lowest low is here. So first entry, second entry, third entry, that's like a fourth entry short. You could look at it possibly as a breakout pullback long on this range. That probably would have played that range right along there. And you can see that is where it comes back to. So, and you might even actually look at this as a double bottom now and then a failed second entry, but it and a breakout pullback long. So that would be the only way you might enter that trade. I still think it's too aggressive. And then there's nothing else here. And then you're just kind of working sideways. But you do get a double test here. You make this low, you test it once, you test it twice, but that signal bar is not good enough. But you come back again, and you got a pretty good signal bar. Again, I marked it green just simply because there's not a lot of room back there. So if you enter this one, you got to have enough room. So you may have to let it break higher and use a limit order. And I don't know if you'd have caught that trade that way or not. There's another one of those little breakout pullback longs here, but this signal bar is not even as good as that one. So I just don't like it. And as you would expect, we break out there. Plus we got the break here now to a new high. And then we got a little trend working down. And again, you don't really get your failure to enter or your reversal pattern. And then you're just kind of going sideways here. And there is a failed second entry short here, but that's just an inside bar. Actually, it's not. It breaks lower there, but it closes equal right into the EMA. My gut feeling is if it breaks higher here, we're going to go higher. But again, I just don't think you want to risk that trade. It's a lot of sideways action. It's another little breakout pullback long too. So if you draw that, you can kind of see that we break out and then pull back and then go higher. So again, you could argue for it to be green. There's always going to be some trades like this that you might say, hey, it might even look a little better on your chart or something. And you might say, hey, I'd take that trade with that read. But so just because you don't every single trade, especially the aggressive ones that are close, we don't see them eye to eye. It doesn't mean that you're wrong or I'm wrong or you're right or I'm right. It just means that based on our experience, we see it a little differently, and that's going to happen sometimes. So I say that probably not enough, but I say that from time to time, but we're always getting new people in here. So just because you see a trade that you like that I don't mark doesn't mean that, there's not some reason that you couldn't make an argument for that trade. It just means I think it's too aggressive or it didn't look as good on my chart. We run up. You got your trend line. You can see it right off those first few bars. We run up. It turns out to be two-tiered. And then you get two legs back to the main key entry point. It tries to come back to the EMA, but it's just too far away there. And you got a second entry long. And that's a fairly strong trend. And that's a great key entry point. So you may take that trade just because we're looking for prices to go test the highs of the range. And so there's still plenty of room left there. It's just a little bit far from the EMA, and that doesn't mean that prices won't go higher though. It just means the further you get away from that EMA and the longer it's been, the more risky every trade gets. So you'll see once we've been away a long time like that, you won't see me mark many of those unless it's a really strong trend day, which this is not. However, this is a pretty strong trend, and if you look for your measured move here, which is from that low to that high, then the correction, and so that puts it up here. So you still got plenty of room left for that. You got more room left for the high of the day, and this trend is still in play. So there's some reasons, and that's a really strong move up. You could actually draw a short-term trend line right up through here too, which I didn't. I had it on there earlier, but I took it off and forgot to put it back on there. But you can see that's the first break of it too. So there's a good chance that we'll run up to a new high. And you see if you look at it like that, that might actually be the play because you get this break and then there's two legs up and it reverses. But this is probably correct because we bounce off that trend line a few times. And this is just a failed breakout, and so prices can't sustain. But you see we still run to make a new high before we turn down. And so that leads me to believe the bigger channel here is correct too. So we'll just give it a little different color. Just to make it a little easier to see in case you want to come back and study this. But there is a short-term one right there too. And you could make an argument that we got a close outside of it right there. It's just not very convincing. And a move up and then a two-legged correction. And that could be the center of the pattern. But with this being a range day, we don't quite make it. So that's another way to look at that. We run up here and you get a first entry, second entry, but it's right into that EMA. And even though it works, I don't like it. And of course you got this little trend working down. You get an overshoot and they're so far away from the EMA, and we haven't tried a retest of the high yet. So this actually breaks lower and fails and comes back. I like going long there. I'd probably wait on this one but I do like the engulfing one on that one because of those matching lows. It's probably going to trap people. So, and look at it go. It rockets right up to a new high, and then we quickly get a reversal right there. So excuse me there. I've got a little throat problems today. The pine trees here in the south are dropping their pollen again, and everything's yellow, so it starts to affect me this time of year. So I start to get a little throat troubles. But anyway, first entry, second entry, just not a good signal bar. Otherwise, I would have liked that for a possible second entry. It's a little bit congested, but that's clearly two legs back. So actually the second entry is right here, first entry, second entry, but that's definitely too congested. But you can clearly see it looks like a little two-legged correction in the middle as well. So do, and then like my little sound effects, down, up, down. That's your two legs down, and then you've already had one leg up, so another leg up. So this is truly, I look at this more as your second entry than this right here because that just looks like some sideways action. But there's no entry there either way. Just skip that one. Runs down, then we're going sideways again. You can't go long here, really. The bias is down. We traded down into this. We just came off the highs on a failed breakout, so we're probably going lower. So you need to be looking for shorts. And then you get a little tiny bar here. You got a new high in this first entry, second entry, and it's right at that key entry point working down. This really kind of confirmed it. Although we do have a close outside here. We don't have a new low yet, so there's a good chance. But at this point, there's a good chance we're going to make a new low. But at this point, I'm really playing this range. And that is a nice small signal bar. It's only 5 ticks. Plenty of room to get out before the low side, and you can see we run down the low side and bounce and come back. Then you get a lower high here as well. The problem is there's not a lot of room left, but we're probably going to try to make a new low, and the bias is down. Okay, I had a slight interruption there, but yes, if you can get in this one, you'd have to let it break lower and drop a limit order a few ticks back just to make sure you got enough room. But the hope is, since we've already pushed through a couple of times, we may push on through. But you see here, we didn't. So you always have to play that in mind. But this would have worked. It broke lower and then it backed up, and you could have got in this a couple of ticks, at least a couple of ticks, maybe 3, and then the bottom drops on out. There is a lower high here right off the trend line, but you had a break here, and you've already got a couple of legs, and you're not really back to the EMA here. Again, it is off the key entry point there, but look how much sideways action. This is what will happen to you. And unfortunately, you don't get a very good signal bar there, or you might take that back. Plus, that makes a new low. So you'd really want to see a higher low there. You get a higher low here, but no setup. And then finally, you get your reversal here, and you still haven't got back to the high. So you may take that trade right there. I mean, this one's played out. This looks like a reversal. This trend line's in play. I would expect prices to probably come back and test the highs of the range at a minimum. We do end up doing that, but they make another run down. But this still it gets exactly 6 ticks, which is what you need to get a 4-tick scalp on a buy stop and to fill a limit order. And that's why we go for 4 ticks. You'd be shocked how many times you'll see prices move just enough to get that 4 ticks. And then you can see they continue to try to push it up, and they just couldn't. And then suddenly it drops, and they get a bunch of sellers to come in, and then suddenly they reverse it again and look at it rocket up. And that's how they, sometimes when they can't push it through, this is how they'll do it. They'll let it sell in the other direction and trap in a bunch of traders and trap out a bunch more, and then it gives it new momentum when the sellers realize, hey, I made a mistake, we're still going higher, and then the buyers decide, hey, I was right all along, and they come back in. And that's, look how that rockets back up. And you don't know that this is going to happen. You don't know this is what's going on at the moment, but after the fact, it's real obvious that's what they did here. They couldn't push it higher. They couldn't do it here, and they barely got a little higher here, and they still couldn't push it up, just going sideways. And so they let off the pedal off the gas, and it drops, and the sellers come in, and the buyers all say, oh, I was wrong. And then suddenly it reverses. And all these sellers realize, oh, shoot, I'm wrong. All these buyers realize that jumped out, realize, oh, shoot, I was right. I got to get back in. I get a better price here anyway. And boom, look at it go. That's what's happening right there. And that takes us into 2 o'clock. So again, this is a lot of trades here, so another long video. I hate these 30-minute videos. It takes forever to process them and upload them. That's one of the things about the time that, even though it takes me 30 minutes to do this video, I spend another hour or so processing it. So there's more that goes into this than just recording it and it's there. So I have to remind people of that sometimes, but that's why I like to keep the videos to 15 or 20 minutes. And used to, you could do that, but there's a lot of price action here today. This is not high volatility, but there's a lot of trades in here and a lot of sideways action, and it takes a little bit of explaining, and there's quite a few trades. So, but anyway, I'm gonna quit talking. I'm gonna wrap it up so I can get this done and uploaded. This is Mac with PriceActionTradingSystem.com, and I'll see you tomorrow.